So tell us, our guest today is really bullish on the anti-artificial intelligence trade, investing in sports teams.
Yeah, he thinks that could be the next big thing. And apparently, you don't even need to be a billionaire to get in on the action. All you need is $40, and you too could own a sports franchise.
And we'll hear from him in a bit. I'm Gunjan Banerji, lead writer for markets here at the Wall Street Journal.
And I'm Telis. I write for the journals Heard on the Street.
And this is WSJ's Take on the Week, a weekly show about money and investing.
Each week, we're bringing you conversations with insiders and from inside the Wall Street Journal's newsroom about markets, finance, business, all that interesting stuff.
So we are going to dive into a conversation about sports and investing in sports. Later on the show, we'll get to a conversation we had last week with Chris Marangi. He's a co-chief investment officer of value at Gabelli Funds, and I'm really excited for this one.
But before we do that, though, I have to ask you about the big market news of the week, and that is DeepSeek. I will be honest, I had not heard of DeepSeek before a few days ago. But now, of course, it is the driving force in the market. Gunjan, what is going on? Are we having a dot-com bust moment here? Is that the action that we've seen in the market? Is it that dramatic?
You know, when I was on the phone with investors over the past week, I heard a lot of unease. I think a fair share of them said, hey, we think people are going to come back in. We think they're going to buy the dip. And then I heard others who said, what if this is a turning point? We just saw the peak of the AI boom play out right before us.
Maybe there are kind of conflicting economic things coming out of this, right? On the one hand, okay, what if companies aren't going to spend the money that they were expecting to, right? And for now, we did have reports from Meta and from Microsoft. They both are continuing to spend that money. So for now, they're not saying, okay, wrap it up, we're done. And also, and this is kind of the paradox effect people were talking about, if AI is really cheaper than we thought it was, doesn't that pull forward a lot of the economic and productivity gains and maybe some of the job losses too?
Should we be more bullish?
Exactly. If AI
is
we've gone ahead and skipped the middle stage of it getting slowly cheaper, did it fast. Are we looking at an economic driver because of cheap AI?
And I think that's what everyone is trying to parse through right now, right? And there's so much uncertainty out there because people piled into this one AI trade, and it's just not looking as straightforward as it did even a week ago.
Well, we have some economic data coming up this week that will help us begin to parse through that, though obviously I think it's not going to reflect anything that's happened in the market in the past week. But obviously we had the Federal Reserve continuing to hold interest rates steady this past week. Part of what they will be doing is really data dependent. And so that's why we've got the jobs report coming up at the end of this coming week that will certainly be high on the Fed's radar of, is the data showing the economy continuing to be strong, which makes a cut less likely, or is there maybe some weakness, which maybe puts a couple of cuts back on the table for 2025?
I mean, it seemed like the U.S. economy ended 2024 on a strong note, in part because of consumer spending. I know this is an area that you follow quite a bit, and you've been following what's going on with American Express, Synchrony Financial.
Yeah, and big credit card companies.
Exactly,
there.
And they can give us a lot of clues on what's going on at a really granular level. What have you been seeing there?
Well, let me boil it down this way, because I think there's a lot of conflicting indicators about consumers that you hear about, right? Sometimes you hear, delinquencies are higher than they were a couple of years ago. Yes, that's true. You see retail spending numbers good, right? But how much of that is being done through people's credit cards, right? So here's how I draw a line through all of that. I think the consumer is healthy. Their balance sheet is pretty good, meaning that they're making enough money to generally cover their debts. They're feeling okay, but they are not extravagantly spending.
The YOLO spending.
YOLO spending, that stuff that we saw coming out of the pandemic, buying trips, luxury items, things like that, that is just clearly not happening. But one thing that I think people, at least in my life, are continuing to spend money on and take part in are sports, as ever,
Definitely.
A huge part of American life, and maybe increasingly a huge part of your portfolio as well.
We're going to get to that. I'm really excited for this great conversation that we had with Chris Marangi, co-chief investment officer of value at Gabelli Funds. We talked with Chris about sports investing in the public markets, in the private markets, And we also got into sports gambling a little bit too, which I think is going to keep being a hot
Gambling,
topic.
Gunjan, right up your alley.
Right up my alley.
Chris and his funds are heavily invested in the sector, including in companies like MSG Sports and teams, even teams like the Atlanta Braves. You should stick around. We're going to have that conversation after the break.
So we are joined today by Chris Marangi, who is the co-chief investment officer of value at Gabelli Funds. We are going to dive into sports and investing in sports teams. Chris, so great to have you here today.
Great to be here.
So I think a lot of us have been marveling at the rally in stocks, cryptocurrencies, AI trades, you name it, right, over the past year or two. What I think a lot of people don't realize is that sports teams and their valuations have been just on an insane run as well. For example, the sale of a minority stake in the Philadelphia Eagles recently valued the team at $8.3 billion. That's a record for any sports team.
But Gunjan, that's great for like billionaires who can buy sports teams. But what I also think is interesting is how the investable sports universe seems to be changing. Like, not only are there a couple of teams that you can actually invest in directly as a public investor, but there are also like other ways, right? There's ancillary sports businesses, media, sports betting. There's collectibles and things like that. So I think as a retail investor, I think the sports phenomenon, it's like, is that the next crypto AI type thing?
All you need is $40 and you could be an owner of a major league franchise. That's the Atlanta Braves Baseball Club, which trades for about $40 a share. So, there are a limited number of ways to participate in the growth of sports assets directly. There are 4 or 5 of them to be specific, which I'm sure we'll talk about. But there are ways to benefit. You don't have to be a billionaire.
So Chris, you and I sat down a few weeks ago at your offices in Rye with Mario Gabelli, of course, one of the most renowned value investors out there. I bugged you about markets, the economy, AI for quite some time. But sports and investing in these sports teams was really an area you both seemed to light up in. And this seemed to be something you both really got excited about. Why are you bullish on the space right now?
So it fits within our broader theme of live entertainment. There has been a large secular trend of experience versus things. I think some of that has to do with the alienation that comes with technology. Some of it's just generational. But sports are certainly a part of that. And sports teams historically have been great stores of value. That's because they're very durable. They are not particularly sensitive to economic conditions necessarily. They cross all demographic boundaries, young, old, different ethnicities, obviously. And as you mentioned at the top, they've actually performed quite well. Hard to measure because it's a private market,
Sure.
but one measure of how well they've done, if you compile the annual valuations of the Big Four leagues and their sports teams that comprise them over the last 10 years, they've compounded about 16% on average.
Oh, wow.
That's versus the S&P at 13%. Obviously,
It's not
both
an
high
apples
numbers.
to apples comparison exactly,
Not
but that is
exactly,
impressive.
but it's indicative. And that data, that private market data, is informed by actual transactions that have taken place. Again, you mentioned one of them, a very recent one, which is the Eagles at over $8 billion, which was a minority transaction. So may actually understate the value of the Eagles. But we'll see. Obviously, there's a lot more institutional involvement now in this market as well as private equity firms can now invest in the NFL. They've been able to invest in the other leagues for several years, and a number of firms have invested in other teams. So, again, endowments, pensions, others are participants and will increasingly be participants.
And there's publicly traded ways too, right? You pointed to the Atlanta Braves. You have MSG, which is publicly traded and oversees the Knicks. I live close to MSG, been going to Knicks games for years. They haven't always been very good. Does that mean that they're a bad investment?
No, actually, it's actually been a very good investment, the Knicks are amongst the most valuable NBA franchises out there, if you believe some of those who value teams. And we certainly think that the Knicks are worth, I don't know, $8 billion, $7-8 billion at least.
But you're a shareholder there.
We are.
Right?
We are among the largest. Our clients are among the largest shareholders of Madison Square Garden Sports, MSGS. They're 24 million shares. The stock is around 220. There's very little debt, and for that you get 100% of the Knicks and 100% of the New York Rangers, one of the original hockey clubs in North America, and obviously you're getting the Knicks at a bargain discount and the Rangers for free by that measure. So, with that franchise specifically, or with that company specifically, how do we actually realize the private market value? And there are some opportunities. I don't think the Dolan family, which controls the company, is going to sell those franchises, because what would they buy? Another sports franchise? That's what rich people do. But I think it's conceivable that they would actually sell minority interests in each of those teams and arbitrage the public markets themselves.
So if it's not related to the success of those teams, right? So if it's not, you mentioned the Atlanta Braves are publicly traded. I think your fund also is invested in the Braves.
Our
stock,
clients
right?
are the largest holders. We own about 12. Our clients own about 12% of the Braves.
Okay. And they've been a pretty good team for the last few years. Is that a driver of that stock? Their success on the field?
It's not inconsequential. I mean, having a bad season is not going to move the stock meaningfully.
Yeah.
But over long periods of time, obviously, you're thinking about gathering an avid base of fans that's going to spend money on merchandise and spend money to go to your arena, buy hot dogs, et cetera. And I think there's probably some impact for how well the team plays.
Are sports franchises then a reflection of just kind of our bullish economic environment in which, obviously we've seen huge spending on lots of other in-person experiences, right? Post-pandemic, there was all the revenge spending on travel, eating out, things like that. Are sports a reflection of that?
Yeah, it's an interesting question, and obviously there's got to be a balance there with the positive secular tailwinds. We'll see what happens with the cyclical. Obviously, it's not cheap to take a family to the ball game.
Yeah, certainly not.
And that might be an area where consumers cut back, but they haven't thus far. So, and that, as you alluded to, since COVID, it's been through the roof. It's obviously been we've seen a significant acceleration.
So this is an economic play. And then there's also things like the media environment and sports betting that are playing a role, right? Tell me a little bit about that.
Absolutely. So we'll start with sports betting. So in 2018, the law changed, allowed legalized sports gambling in the U.S. It already existed abroad, obviously.
There's a Supreme Court decision,
Supreme
right,
Court
that
decision
paved the way for states to start to legalize it.
Correct. And now, legal in most states. And that has done a few things. First of all, it's opened up a new category of advertisers, DraftKings, FanDuel, et cetera, more money. Okay. It's also, and it's hard to put a number exactly on this, but it's also increased viewership. Huh. So the concept of prop bets, parlays.
Oh, yeah.
How many strikeouts is somebody as a pitcher going to throw? How many yards is Travis Kelce going to have, et cetera? You can bet on those items, and that might be a reason to tune in longer than you would if you just had a bet on who's going to win the game, and the game is a blowout. The leagues and the teams haven't necessarily benefited directly, but they have benefited almost assuredly indirectly.
So does your fund also invest in the stocks of sports betting companies?
We do. And you at the outset, you talked about some of the ancillary companies, obviously some of the sports betting outfits being primary ones. But more broadly, the media companies. And that's where we've had a historical core competency, accumulated compounded knowledge over decades. And it's been a plus and minus. It is the dominant content on television as we know it. If you look, it's, there'll be 120 something million viewers for the Super Bowl, almost half the country probably tuning in at some point. And it accounts for, sports in general account for something like 50-60% of the top programs in prime time throughout the year.
The stocks of sports betting companies have been doing okay lately. There's an ETF, BETZ Bets, that owns some of the, kind of big plays here in the U.S. as well as globally. So, it owns shares in DraftKings, Flutter Entertainment, which is FanDuel, right?
Yep.
They own FanDuel. That's done okay. It's up about 12% over the past year, as of today, as of when we're recording this, underperforming the S&P 500, which is up about 22%. Why is that? What is it about the sports betting business that hasn't translated into crazy stock market success like you've seen in other areas?
The moats are narrower. It's a competitive business. Obviously, you've got lots of alternatives and alternative marketplaces in which to bet. Costs a lot of money. Those companies all spend a lot of money on advertising and marketing to get customers. And they're subject to, like the casino companies, they're subject to, runs of bad luck. You had, DraftKings last quarter, I think, had some bad luck on some parlays. They're also investing a lot of money in their
Bad luck
algorithm.
meaning like
the house lost more
wow,
than they should
okay.
have.
And that can affect the stock.
Short term.
Interesting.
It's
Interesting.
short term.
Wow.
Yeah, I mean, listen, long term. Surprise, surprise. The house is going to probably win.
Yeah.
In
Well,
aggregate.
The Journal had a fascinating story about parlay bets.
Correct.
Yeah.
So parlay bets are, for those who aren't familiar, it's when, and correct me if I'm wrong, Chris, you bet on a series of things happening, and they all by themselves, they seem pretty likely, right? Like, oh, Patrick Mahomes will throw for 200 yards, which is like not that much for him. But all of these things, there might be 10 parts of it. Each of them have to hit, but are they succeeding in bringing in new audiences with these parlays? Are we starting to see that? Would that be like the growth area for them? That type of kind of like more casual fan betting?
They certainly hope it
Okay.
will be. And one of the attributes of these parlay bets is you can bet with very little money. You can, I think in the Journal's cites an example of somebody betting $10.
Okay.
Had the potential to win $22,000. So the payoffs are very large, but obviously the odds are heavily against you. And one of the issues there is obviously how do you even calculate all those joint probabilities? And obviously the odds makers have an edge in that respect. And it's, I think, hard for people to really gauge what it means to. It's why people play the lottery, because you don't understand how long the odds are for you that you'd win. So anyway, we try to keep it a little simpler, which is why we're focused on the content creation themselves, the IP, which is true not just with respect to sports, but in media broadly. You want to get as close to the creators of content and the owners of that content as you can, because that content has a very long tail and it will get monetized. If it's worthwhile, and sports certainly is worthwhile, it gets monetized.
So, Chris, you mentioned that one of your favorite gifts at baptisms
Yep.
is shares of publicly traded sports teams. Is that right?
It is. It's a good one. It's a good conversation starter. Used to give shares of the Walt Disney Company or something because they're fun. Try to get youngsters interested in investing. But listen, having ownership in a sports franchises has some appeal. I think it gets younger folks interested. But, it actually taps into one of the things we should talk about here is this gap between the private market value and the public market value, because the private market value, you can, as an owner of a team, you get the owner's box, you show up in the New York Post.
You're on TV all the time.
You don't get that if you own $40 worth of the
team.
You
can access a little bit of it, but
you
not
don't get
all of it.
Skybox
and so that's partly
no
why there's
that's
partly why there's this arbitrage between public and private, and why ultimately the way to realize the full value of a sports franchise is probably to take it private.
And private equity companies are coming, like the NFL is going to start encouraging more private equity ownership.
Right,
so.
and that's largely a liquidity story. You have a lot of families who own football teams who started with the NFL decades ago, who on paper are worth billions and billions of dollars, but don't necessarily have access to that money. And so one way for them to get liquidity, and one of the reasons that the NFL changed the rules, is to sell minority stakes.
Is that a type of investment that we might see more of broadening to the retail investor base? Obviously, there's some interest in allowing generally people to invest more in accredited investments.
Correct.
So if a private equity fund owns a piece of a team, maybe you can get in on that through some piece of that. Do you think that we are broadening the investable area?
I think you'll see some of that. And in fact, we internally at Gabelli are thinking about how we can bring those opportunities to our clients, accredited investors, packaging up some of these LP stakes, et cetera. So, still thinking about that, as are hundreds of others firms out there. But, for the moment, we invest in public stocks. That's our main business. And so we're focused on these 4 or 5 publicly traded sports owners.
We're going to take one last break. And when we come back, we're going to ask Chris one last question on gambling's impact on sports. Our last question for you, we touched on gambling a lot, and this has been an area that has seen so much growth, right? The past few years, feels like everyone I know is lighting up their FanDuel accounts. But do you think that the sports industry is going to regret getting into bed with gambling?
It's a great question. It's a really interesting debate, and lots of folks in the leagues have thought about this. How do we meet this need, meet this desire on the part of consumers to bet on games? Obviously, they were finding, before gambling was legal, before 2018, people were finding ways to bet on sports in ways that may have been not desirable or less desirable than legalized gambling. But how much do you want to push it? I think they have the league owners, the team owners have to be aware of the integrity of the game, preserving the integrity of the game, the fairness. So there's a lot of sensitivity to betting scandals. We had one last year in baseball, maybe. There'll be others, but it's certainly something to pay attention to. Ultimately, don't think it's going to impact the trajectory of sports team valuation. And, this is going to be additive. And, we think they're great long-term preservers of value.
This has been great. Thank you, Chris.
It's been fun.
Thanks for having me.
It's been a lot of fun. So that's right. So tell your kids, forget about learning coding. Go outside, throw the football around, swing the baseball bat. AI is going to eat those jobs, but professional athlete, that's one that'll still be around.
I'm not sure that's what I would tell my kids.